Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Wednesday. All right, so I've got the economic calendar up to kick off the morning. So just a quick heads up that we've already had building permits, as you can see there at 8:30 housing starts. And then we have what seems to be just an endless list of FOMC speakers as we wind down the week. It's bonkers. They're all speaking multiple times. Gold star, I think, to Harker, who's speaking, I think, every day for the remainder of the week. So starting at noon, we've got Waller, Williams, Bowman, Beige Book, and then, gosh, look at that, Harker. Now, what's really interesting is we do have IMF going on, and tomorrow at noon, we have FOMC Powell. So many of the Fed speakers between now and Powell don't mean as much because we know, the chief poobah is speaking on Thursday at noon. However, all the members after Powell, so you got Goolsbee, Barr, Harker again, Logan, just all of them, right? They just won't shut up. All of them after that take on a different level of importance because what we want to see is sort of a unison of messaging. And clearly, the bulls want a more pause and more accommodative tone. So there's really not that much question as to whether or not the Federal Reserve is done hiking. I mean, we have a 90%, 89% expectation for a hold at the November 1 meeting, and then we move out to December 13, again, mostly the hold. So even if I were to look at this column of the quarter point hike, and even there's a 4% chance that some traders are factoring in a half point hike. But even if you were to mix those two together, add those two together, you're really talking 40% expectation for a hike, while nearly 61% expectation for the hold. Believe me, the Federal Reserve knows what these numbers are, and they're not out to shock the system. If they want to hike, their messaging will start to indicate that that's what they want to do. And they can measure how impactful that messaging is based on the very thing that we're looking at right now. So if you want to know how the magical decoder ring for the Federal Reserve are these target rate probabilities and is the Fed Fund Futures contract, right? So that's what we've got. Now, the challenge is, at what point does the Fed Fund Futures, based on the messaging, based on the data, start to factor in a cut? And really, it's not until July do we see that really fully discounted, in that the cut is cumulatively the sum of all those expectations, quarter point, half point, even 3/4 point cut expectation by the time we get to July. When that cumulatively is greater than the hold, now we've got sort of fully discounted. We don't have that in June, although it's sort of neck and neck, but we really don't have that in June. So this higher rates for longer problem is really what's the biggest issue to the downtrend in bonds, the uptrend in the dollar. All of these, by the way, that I discussed in the free video yesterday. So a lot of what will dictate how I trade, whether that be swing trading or day trading, is going to be based on relative performance. But what the heck does that even mean? Where do bonds, where do dollar trends factor in? So if you want a little bit of a quick breakdown, I think we did that in about 7 minutes, 8 minutes. If you want a quick breakdown of how that works and why a lot of what we hear repeated is just flat out not panning out in price and not panning out in probabilities, check out the video back at the Simpler Trading YouTube channel. What the heck did I call it? Let's see. What did I call that video? There you go. Relative performance setups. Okay, so pretty much exactly what I'm talking about. Relative performance setups. So check that out back at the Simpler Trading YouTube channel. All right, gang. As always, this show is about your questions. So we're going to go ahead and jump into those right now. And let's see here. What have we got to kick off the morning? All right, D. Bolton. Yep, we got some interesting movement potentially in financials, whether that be JP Morgan, whether that be Morgan in terms of our earnings impact. Yes, we're going to keep an eye on those. Financials have been struggling, which is a lot of the reason why the Dow has been struggling. So talk about really hitting the heart of relative performance. So definitely something for those of you that are watching the Dow, watching financials, even relatedly, watching the Russell. Yeah, definitely keep an eye on the earnings in financials. The number one weighted sector in the Dow and in the Russell are banks. Okay, Nacho Wu asks, love the swing setup rules. Cool. Trying to figure out day trades. How do I factor gap days into my trading, especially when using my previous day's close in Pingala? Nacho, I don't treat gaps as a setup. It's not something that I'm looking to use. I know a lot of folks love gaps. They think that gaps fade. And that's true, but it's not true in terms of the immediacy, right? The reaction is not always going to be immediate. Gaps are simply support and resistance. And I just try to factor that in the way I would those sentiment reads like the Pingala, like the previous session close. So I don't use gaps as a primary consideration, really at all. So for example, today, and by the way, there's two kinds of gaps. There is a true gap, which is sort of, I believe that's market profile lingo for a gap open that is both beyond the previous session close, which would just sort of be that vanilla gap, and beyond the previous session high or low. So if I look at the S&P this morning, taking a look at the daily time frame on the right side, we're clearly going to have a gap from the previous session close, which is right there. So clearly we're having a gap down, but is it a true gap? No, because the previous session low is way down here, right? So this is my previous session low. So not that that's a major level for me, right? But I can put that level in there. So there's my previous session low. But this would not qualify as a true gap because I'm not looking at that kind of open. Now, that doesn't mean that we may not have more sizable gaps elsewhere. Gap down on the Dow, obviously in the works. Gap down in the Russell in the works, and gap down on the Nas. But really, if you step back, right, and you look at the entirety of the move, let's go ahead and put let's see here. There is the high of the range. So I'm just going to put that here in red. Right, there's the high of the range. This is my previous session high. Here's the low of the range. So put that in there. Here's my previous session low. All right, I like to do a lot of things still in a manual way on my charts, gang. I think there's a lot that's sometimes lost in not just looking at some basic levels and drawing a few horizontal lines that are objective, like highs, lows, and closes. So you notice it's really an inside candle. So let's look at it in another way. This is an inside day so far. So until we escape the range of the previous session, all right, let's see if I can zoom in a little bit more. There we go. This is the previous session. Until I can escape that range, and frankly, I don't need to look at much more than just a day or so of action on a daily. I really don't need a lot of action there. When I'm day trading, as I will be doing here shortly in the Sector Secrets Mastery and in the options room this morning, all I really need to know is, where are we in relation to these previous session levels? Really simple to decode, really powerful sentiment levels. All right. Okay, next up is Ren. All right, Ren asks, two questions. How do I identify trades I will take prior to the open? I don't. Ren, I don't. Yeah. So I know there's a lot of thought around, hey, are there trades that I can take right on the bell? And I do not believe that is something that I want to do. I'm going to spend the first 5 to even 15 minutes determining directional bias, right? I'm going to spend some time determining what has trends, what doesn't. Now, obviously, you can take a look at the NASDAQ 5-minute chart. We're inheriting a downtrend. So very likely I'm favoring long puts or I'm favoring a short setup on the NQ. So I've got some directional insight, Ren, but I don't necessarily want to be slinging trades right on the bell. That's never the goal for me. But I already have a list of things that I know are more probable because of those sentiment reads. Okay. When do I set my stop loss? When do I set it? Immediately after. So one of the things we do, Ren, is when I am looking at risk in a futures contract, or more specifically when I'm day trading options, risk is predicated on the amount of premium that I've paid. In other words, risk is based on cost. I don't know the cost until I've actually bought the option or until I'm bidding on that option. But at that point, I know where my stop is because I know it's a percentage of premium paid. Do I use hard stops? Not usually. No, I'm not a fan of hard stops until I'm at a break-even stop or until I'm at a trailing stop. So that's the way I look at that. Thanks for the questions, Red. JG asks, I start each month with 45. Not necessarily, JG. I have since April put about 45. I think it's been anywhere between 45 and 50-ish in my day trading options account. So I have a separate account for futures. I have a separate account for day trading options. I have a separate account for swing trading options. So in my day trading options account, yeah, the last few months that I've been sharing the trades viz, there have been roughly 45, or more specifically, JG, I've been pricing my position sizing based on 45,000. So is there enough liquidity to trade with a $200,000 sized account? Oh yeah, it's going to change. JG, here's what's interesting. The smaller your account, the smallness of an account is going to affect the cost of the options that I would say you're allowed to buy. The larger your account, there's a different type of restriction. You're going to have to focus on very, very liquid symbols and strikes. And sometimes you can have a liquid symbol, but not necessarily a liquid strike. So either way you go along that pendulum of small account to Godzilla-sized account, there are restrictions, and the restrictions for larger accounts are size, right? You've got to have the open interest, and you've got to have the narrowness of spread to keep your cost and your risk manageable. So yes, absolutely. I've day traded. I think the largest account that I options day traded was, I think, 360, right? And I really didn't like it because I had to trade fewer symbols with a lot more size. Now, somewhere between, for me personally, being able to be in up to 4 to 6 setups, 4 to 6 entries, I like to have not just everything focused on one narrative, right? Because I don't want to have to bet big on one idea. I like the idea of, hey, let's put a little skin in the game in healthcare, financials, maybe regional banks, maybe the Russell, whatever it is, around 4 ideas. And so the largeness, like I said, of an account can limit what you can trade. But absolutely, can you trade 200K when I'm day trading? Absolutely, because for the most part, and if when you're in the Sector Secrets Mastery room, I talk incessantly about cost, risk, and liquidity. And liquidity is the issue, JG. So again, different restrictions depending on which side of the sort of the scale you're on. But for sure, it's just, you're going to end up focusing on indices and very liquid stocks that are typically weighted heavily within those indices, but very doable. Yeah, been there, done it. It's doable for sure. All right, OKE asks, Randy, and long term, sure. So if I'm looking long term, it's going to be daily time frame. It's still a long. I'd rather be long overall. We're north of the 200, but this is still a choppy market overall, and arguably it's overbought. Sorry, Randy, it's largely overbought in this area around 70. So I don't have a long-term play from where we sit right now. Now, I know a lot of traders might think, hey, let's get long. It's been rocketing up since about $60. It's had pretty much a nonstop move to 70. But the issue here is, when I look at a symbol like this, is I need a pullback, even if it's a 50% pullback of the last major move, even if it's a gap close around, say, 68. I need some sort of retracement. So while I would say yes to the long side being north of the equator is just the 200. Yes, I do not. I do not want to be buying here at the top. All right. So thanks for the question. All right. Anusha asked, "Hey, Anusha, I'm glad you asked this. Telegram ID, WhatsApp number. Number one, I don't have a Telegram. I don't use Telegram. I don't. I don't even have it. If someone reaches out to you via Telegram, they are scamming you. They are trying to steal your money. I get people every now and then saying, you know, I got scammed. It's awful. But let me tell you, gang, there's no way for me to keep up with the number of false Raghees out there. At last count, there's over 100 on TikTok. I usually find a few dozen on Instagram. I don't even know how many are on Twitter right now. Just please know I am not going to contact you via DM. I'm not going to ask you to manage money for crypto or Forex or anything. I trade my own money. I sit in a room and trade with a group of people who are directing their own money, but I'm not going to offer to manage money. Please, please, please tell these people to go pound sand. And WhatsApp number, gang, like I need that in my life. Like I need to give everyone my WhatsApp number, right? No. I will, if you want to reach me, I'm at Simpler Trading. I'm at my own YouTube channel. I'm in the Sector Secrets Mastery, but no, I will not reach out to you all via social media. I get that from time to time, and it breaks my heart, but there's nothing I can do from this end to stop those people. Absolutely nothing. You report one and 9 others pop up in their place. The only way to address it is education. No one here at Simpler will ever DM you to say, hey, I can manage your crypto. Never going to happen, right? Okay. Let's see, what else do we have here? The Simpler Trading schedule. Rob, I'll be there in about 3 minutes. I'll be in the options room in 3 minutes. All right, next up. Good morning, Christian. How many months on average your day trading can have a down month? A down month. I can't, Christian, and I don't say this to be braggadocious. I've had down days. Last week, I had a flat week. I had a absolutely flat as a pancake week. It's actually rare that I have a down month. So flat weeks, down days, but I rarely have a down month. But that doesn't mean that I made a ton, right? Now, granted, I did about 90% in September. We did 94% in August. Forget July, because everyone made money in July. But people ask me, Rog, what did you do in July? I did 170%, but who cares? That day went straight, that month went straight up. It was almost hard not to day trade and make money when we're having sort of a buy everything month like July was. So one of the things I will say, Christian, whenever I'm sharing with you all 2 things, always be aware of this. And this is a great place to wrap up. Number one, if we're ever going to talk about win rates, right? Remember, you can have a win rate that's too high. I know when my win rate starts going above 78 to 80%, I'm taking profits too quick, right? That's something nobody talks about. We're not after 100% win rate, right? Only noobs and the uninitiated understand that. And I know none of you are that. We're not after a 100% win rate. We're not even after an 80% win rate. Somewhere between the mid 60s to 70s is where you want to be. Otherwise, what's happening is you're taking profits too soon. Why does that matter? Taking profits too soon? Because we're going to have losses, right? We're going to have losses, and we have costs associated with our trades. So putting on hundreds, if not ludicrous numbers like thousands of trades is absolutely mathematically ridiculous. Multiply out 1,000, 2,000 trades by commission. Then ask yourself, what was my cost just to put the trade on and off, even if I made nothing, right? So be careful, because there's a lot of numbers out there that are floating around out in trader land that make absolutely no sense when you really start to think about the reality of win rates and commissions and fees, right? For that matter. So 2 things always remember. The goal is not putting on a lot of trades. The goal is never to have really a win rate north of 80%. And also, how much money is in the account is really important. So if I show you my win rate, I'm going to show you how much money I started off with, which is why I love the question earlier, which is, hey, Rog, it looks like you had 45,000 in your day trading account. And that's what you did. Now that's the day trading account I use for the Sector Secrets Mastery Room. So all my Sector Secret Mastery setups are reflected there. I have multiple accounts. I think most of you probably do as well, right? So I don't want anyone thinking 45 is the number. If you've got 4,500, cool. If you've got 450,000, cool. It's all scalable as long as you think about liquidity. So I love the questions here today. Let's be realistic about what we're expecting of ourselves and of our accounts. 100% win rate is not the goal. Thousands of trades are not the goal. And we have to know risk based on the account value. What is in the account, right? So I hope that helps. I'll see you all tomorrow, same time, same station. Be good to each other. Options, folks, Sector Secrets Mastery. I'll see you all in just a second.